So let's get right to our market monitor and his stock picks. He joins us now. He is Jason Pride, Director of Investment Strategy at Glenmead, an asset management firm with $29 billion under management. Jason, welcome. Nice to have you here. You say it's important to have a healthy weighting in the U.S., but twist defensively given modest overvaluation. So let's take a look at some of your picks. Abbott Labs makes the list. Why?
So what we're trying to do here is we're trying to keep stability in the U.S. while taking some risk abroad. We recognize that if you're taking risk abroad, that's a little bit stomach churning, particularly with what's going on in Greece right now. So finding stability in the U.S. is the key piece. So that means you have to focus in on things like healthcare services and supply companies. Abbott fits right into that profile, a very stable business model, a decent dividend yield, reasonable valuations, and a company that's able, because of their excess returns on invested capital, to just churn out that incremental earnings growth, even when the economy is still just kind of pumping around 2.5%, which is a pretty moderate growth rate.
Your second pick fits right into that model of emphasizing return on invested capital, 19.6% ROA at Accenture.
So Accenture, again, we're getting that international diversification, a little bit less stable of a company than Abbott Labs, but a decent valuation again, and a company with really high returns on invested capital that, again, can churn that out. The difference in this franchise, this is not in the healthcare space, it's in the technology space. It's one of the largest international IT consulting firms available with a great steady business model, and they're pushing right into the Asian markets and getting a good amount of market share there.
You also like Medtronic. Their acquisition of the Irish domiciled Covidien is one of the reasons why you like it.
Well, it's been a little bit of a controversial issue, given how many companies are pushing into those international areas, trying to use that international cash without bringing it back on shore. Here we find a very reasonable company, again, steady business model, very focused on that supply area of healthcare provisions, but with a nice dividend yield, decent valuation, and a good business strategy for how to do something with that cash. It's basically just sitting there overseas and not able to come back across the borders.
Quick thought on the markets. I know you don't pay a ton of attention to the big macro picture of the jobs report, but you must have a thought on whether today's numbers make it more likely that the Fed will raise interest rates later this year. Quick thought.
Right. So it does make it a little bit more likely. We're still in the camp of a September rate hike being the best approach. They've been communicating June up until now. Fact is they'll probably stick with the June rate increase, but have a very slow trajectory over their course of rate hikes after that in order to compensate for an earlier hike.
Jason, thanks so much. Have a great weekend. Jason Pride
Thanks for having me.
With Glenmead. Ty?